Hi there, welcome to The Trade. Great to be here with you. Before we get to our charts, I do have Gary Glover from Novus Capital standing by. Here's what traders are watching today. And the EU says that it's ready to respond to the US on trade tariffs as Washington leaves its no choice by imposing tariffs on steel and aluminium. And the escalating trade war with the U.S. has prompted Beijing to further expand its ties with Central Asia. Analysts say state-backed firms are looking to substitute U.S. imports and reroute exports. Gold's performance in the first quarter of 2025 has been dubbed remarkable at its strongest quarterly gain in nearly 4 decades. Bulls now eyeing the 3,100 level as the trade war turmoil persists. Meantime, the Bank of Japan could take another key step toward diminishing its huge presence in the bond market next week when it releases its bond buying plan for the second quarter that could include a cut in the size of super long bond purchases. And New Zealand Central Bank says that it will undertake an evidence-based review of its capital regime, assessing it against the settings in other countries in a bid to boost competition in the banking sector. All right, we know what you're here for, the charts. Let's bring in Gary Glover. He's joining us from Novus Capital. Hi, Gary. Nice to have you join us at such an inflection point in markets. So when you look at the chart of the S&P 500, do you think that selling begets selling?
Yeah, it's interesting you say inflection point because on that S&P 500 and also the Dow Jones, those indices have actually expanded 100% of the previous range, and that has marked the high. And that's sort of something that I've mentioned here the last few months there, is that every time we do get an expansion of the range like that, it's normally been capped the market for at least 6 months. So we don't normally see that range get broken for at least 6 months there. So we're normally going to sort of pull back and just underneath that expansion point. So the most interesting thing here is that normally when they do expand 100% of the range, and if there's history of the 50%, which there is in this case, then we normally pull back to the 50% of the range, which is not too far away here. It's around that 54.70. And it's interesting you mentioned the Liberation Day, which is, kind of a tacky sort of comment there. But think about markets in general. Buy the rumour, sell the fact here. Obviously, the market's selling off because of tariffs, and we've got the uncertainty in the Liberation Day, I guess, however you call it. So April 2 probably could be an interesting date to watch for, maybe sort of a possible low here anyway. But post-election years normally sort of are weak in the first quarter, and either sort of mid-March or early April is when they often turn here. So but the market pulling back into a key technical zone there, right in the right cycle window as well. So looks pretty interesting here to me.
Wow. Okay. So how does the XJO, the S&P ASX 200 look, I guess comparatively, but that's just a huge drop that we've seen.
It has come back fair amount, but again, with that range has also expanded 100% of the previous range as well. And you think about 21, 22, 23, that sort of around that 76 sort of 50 has been a lid on the market. So once the market broke above that lid on the market, and then it's basically expanded that range, and that's basically that range there, sort of a double of that range, or a 100% expansion again has found that resistance around 8,600. So not uncommon to come back to where that range broke out. So do think that around this sort of 7,700 area, we've already seen one sort of bounce pretty close to that level. And so look, normally sort of fifth years you sort of get a lot of mid-March lows, so I think there's a high probability that we actually have seen the low for the XJO. But if we haven't, I think it'll only go sort of slightly lower here. And post-election years, which we are in the cycle there, normally they're sort of around typically early April windows, particularly for the Nasdaq and other indices. So I don't think we're going to see too much more lower here, Nadine. I think there's some really critical support zones here, just below where we are. So if we do go back and retest this low here, I think it'll be a buying opportunity personally.
No, okay. Interesting. All right. So that is a technical view of the major
You got to think
markets.
about it in the day. Like no one was wanting, everyone was like in love with the market when it was above 8,500. There was no issues at all.
Yeah.
No reason to sell it, but that's oftentimes the right to sell it. So now we've got all the issues after the market's already pulled back 10 or 12%. That's markets find lows when the bad news is sort of at its sort of greatest or the greatest amount of noise in the market here. So we're getting a lot of negativity, a lot of negative noise at the moment. So this is where fear is the greatest. We're already seeing a few people who normally go to cash at the lows go to cash. So we should be preparing ourselves for a low here shortly, I think.
Well, interesting. Yeah, fear being priced in, I suppose, is the takeaway. So
Yeah.
let's now go to some key company charts, I suppose, for listed companies here in Australia. What's been catching your eye, Gary?
Yeah, so when the market does pull back this sort of 10 or 12% here, we want to be looking for stocks that are actually showing a bit of relative strength versus the market. So if we go back and look at every low, look at the October 22 low, the October 23 low, I think the March 23 low. So those were the sort of key big sort of sell-offs and market lows there. The stocks that actually held up the best, showed a bit of relative strength, maybe even had like a first high low or a second high low in place while the rest of the market's going to new lows. Those were the stocks that came out and performed the best out of that sort of correction. So it's a good time to be looking here. I mean, it's the beauty of a correction here is that this is a time where we're doing our homework, trying to find those strongest names here. Who's going to lead out of this sort of next, the next bull phase? Which stock's going to lead there? So we're going to look for stocks that are making high lows, or maybe even a second high low. And that EBO is definitely one EBOS group. It's got sort of three high lows in place at the moment, which is pretty constructive there if you look at the overall market.
Yeah, okay, we're just bringing the chart up here.
Yeah.
So, yeah, you're thinking that the momentum is to the
Yeah,
upside.
so I mean, you've got a lot of the market that's come off here, like 20%. So some of the stocks are off 20%, like the financials, for argument's sake, and maybe even some of the insurers as well. Whereas some other stocks here, like EBOS here, have actually found a low in July, and since then it's actually made, three high lows here, while the rest of the market's showing some weakness there. So this is a stock that's actually showing some relative strength there. So those are the sort of stocks that we should be looking for, something like this, that stocks that are actually holding up the best while the rest of the market's being weak here. Because typically these are the stocks that tend to lead the next market higher.
All right,
Yeah.
now, Boss Energy, BOE. We had Macquarie out today talking it up. I think it was Macquarie. I might have to double check which broker it was.
Yeah.
But it's such a volatile area of the market. It's such a volatile stock.
Yes, it's interesting here because obviously the last couple of weeks, the market's been pretty weak here, but we have seen a decent pop in the uranium stocks there a couple of weeks back. What we did see was a really impulsive bounce. We saw some volumes that are sort of heavier than normal, and then we have seen a little bit of a pullback there last week, but relative to the market again, showing a little bit of early strength there versus the overall market there. So it was just one of the sort of, I think, in the last 2 weeks there, it's probably been one of the strongest sectors, apart from obviously gold, which has been running for a while. But so this is sort of, for me, this is a sector I'm probably watching pretty closely there. And look, if we do have sort of some fears around inflation coming back there, normally value shares, precious metals and energy are probably historically some of the sectors that perform best if we do have inflationary fears. So I'm not sure those fears are backed up by data. I think they're just fearful of what tariffs might do at this stage. But definitely some of the uranium names have showed a bit of strength there in the last couple of weeks. So I think that's a sector to watch pretty closely here.
Yeah, okay. Interesting. And I'm also pretty interested in the next company that you have on your list here. So this is Ramsay Healthcare. I mean, this is fundamentally has been a very negative story. No profit growth, cutting its British assets out of the mix. We know that it's such a troubled area, private hospitals right now in general. So, I mean, does the same rule about bottomed out stocks hold for something where the fundamental story is so negative?
Yeah, you do have a few changes, Nadine. You've got obviously a new CEO in place there. We've got a little bit of a discarding of sort of old directors as well, and we've probably got a CEO that's listening a little bit more enthusiastically to what the market's saying in terms of maybe breaking up some of the assets, selling some of the assets down here. So there's some moves afoot there in management wise. So that's interesting for the company. But the price action, the chart is actually really, really interesting there, because it's literally been going sideways here for around about 14 weeks. So really, really tight price action there. So, there's a lot of professional traders say, that like the longer the base, like the bigger the breakout. So we have been in a really tight price action zone here for a long period of time now. I think you just got to go back to, I think it was 2017. The ASX 200 stayed in like a 100-point band for something like 20 weeks. It was literally similar sort of tight period for a long, long time there. Once it broke out, I think it moved about 400 points in the first 4 or 5 weeks, and I think it moved about 12% in about 8 weeks. So you can get pretty decent sized moves out of these really tight congestion patterns here. So just get a really sort of tight little tiding range there, sort of call it Davis box, rectangle, however you want to look at it from a technical point of view. Once you break out of those ranges there, look, you can break out on the downside, that's the risk, but we are seeing elevated volume levels there, seeing management make some changes there, which the market has been calling for, and you've just got really tight price action there. So I think if this one does break out, it'd be worth following there, just based on what happens normally when you see a really long, tight pattern like that for a long time.
Okay. So a few different ways to look at these companies and why. Gary Glover, always a pleasure to catch up with you. Thank you.
Thanks, Nadine.
Take care. Gary Glover from Novus Capital. That's The Trade. Stay with us.